Hi friends. Today, we're going to talk about where to invest $1,000. This is a question many people have, especially those who are just starting their investment journey. If you have this amount and want to grow it rather than spend it, congratulations, you're already on the right track. In this video, I'll share two main approaches, explain the nuances and offer tips based on my personal experience. Let's get started. Before investing $1,000, it's crucial to ask yourself, do you have an emergency fund? What is it? An emergency fund is a financial safety net designed to cover 6 months of your expenses in case of unexpected situations, such as losing your job, medical expenses, urgent or unforeseen costs. If you don't have one yet, I strongly recommend making it a priority to create one. Why is it important? Imagine you invest $1,000 and a month later, you urgently need cash. In such cases, you might have to withdraw your investment at a loss or borrow money. An emergency fund protects you from these scenarios, giving you peace of mind and financial stability. Where should you keep your emergency fund? Bank savings account with instant access to your money. Bonds, a low-risk option that allows you to sell assets quickly if needed. Additional tips for building an emergency fund. If saving 6 months' worth of expenses seems overwhelming, start small. Aim for 1 month of expenses first. Break it down into achievable monthly goals, such as saving $100 or $200 until you reach your target. Automate your savings to make it easier and less tempting to skip. You can also consider using cashback apps or loyalty programs to save extra funds. Over time, even small savings add up and can help you reach your goal faster. Having an emergency fund isn't glamorous, but it's one of the smartest financial decisions you can make. It's your safety net and the foundation of your financial stability. If you already have an emergency fund, you're ready to move on to the next steps. If not, start by building one. Now let's talk about the basics. Investing is not only a way to grow your capital, but also a serious responsibility. Disclaimer: this video is not financial advice, I'm simply sharing my personal experience. Keep in mind that all investments carry risks, and you could lose some or all of your invested money. Understanding the risks. Investments always come with a degree of risk. You might earn a profit, but there's also a chance of losing money. Ask yourself, are you prepared to take on this risk? If not, focus on conservative investment options. Choosing the right approach based on your risk tolerance is crucial to a successful investment strategy. Diversification. One way to manage risk is through diversification. This means spreading your investments across different asset classes, such as stocks, bonds, and real estate, rather than putting all your money in one place. Diversification helps balance risk and reward, making your portfolio more resilient to market fluctuations. Long-term mindset. It's also important to adopt a long-term mindset. Successful investors focus on steady growth over years or even decades rather than expecting quick wins. Consistency and patience can often yield much better results than trying to time the market. Keeping up with trends. Staying informed about market trends and financial news is key. Subscribe to reputable financial newsletters or follow industry experts to keep learning. The more you know, the better equipped you'll be to make informed decisions. Reinvesting returns. As you begin to see returns from your investments, consider reinvesting them to accelerate growth. For example, dividends from stocks can be reinvested to purchase additional shares, leveraging compound interest over time. Understanding costs. When investing, it's important to be aware of associated costs, such as transaction fees or management fees for mutual funds and ETFs. These can add up over time and reduce your overall returns. Research options with lower fees to maximize your investment growth. Congratulations on the right mindset. If you're thinking about where to invest $1,000, you're already on the right track. This mindset shows that you're not just looking to spend your money but to grow it. That's the first step toward financial freedom. Now that you have an emergency fund, or you're confident you can build one, let's move on to where you can invest $1,000. Investment number 1. Invest in yourself. The most valuable asset is you. Knowledge, skills, and education will help you earn more in the future. Examples of educational investments: programming, design, and marketing courses, personal finance or investment training, master classes from experts in your field. Why is this important? New skills increase your value in the job market. For example, a $500 course could help you boost your income by $1,000 a month. How to choose the right courses? Pick something related to your job or your dreams. Read reviews and research the instructors. Think about the long-term benefits and how the course will help you in your career. Expanding the idea. Networking. When you invest in education, also consider investing in networking opportunities. Attend industry events, join online communities, or connect with mentors. Building relationships can open doors to new opportunities and collaborations that can significantly boost your career growth. Personal development. In addition to professional skills, consider personal development investments. Courses on public speaking, leadership, or productivity can improve your confidence and effectiveness in all areas of life. Mentorship. Another overlooked way to invest in yourself is finding a mentor. Sometimes spending money on mentorship or coaching can provide personalized guidance that accelerates your growth. Investing in yourself is one of the most powerful ways to grow your capital because it can lead to better opportunities and higher earnings down the road. Investment No. 2. Try entrepreneurship. If you want to grow your $1,000, consider starting a small business. Example of an idea. Buy products on sale and resell them at a higher price. These could be accessories, souvenirs, or rare items. How does it work? For instance, you purchase 20 items for $50 each and sell them for $100. This would result in a $1,000 profit. Real-life case. At one point I invested a small amount in purchasing souvenirs on eBay. By reselling them in another region, I was able to multiply my capital several times. This experience taught me the value of money and the fundamentals of running a business. Scaling up. If your first small business venture is successful, reinvest your profits to scale up. For example, increase your inventory or explore additional sales channels like creating your own website or leveraging social media marketing to reach a broader audience. Building a brand. Think about long-term opportunities, such as building a recognizable brand. Even with $1,000, you can invest in logo design, branding materials, or a simple website to establish a professional image. A strong brand can set you apart and increase the perceived value of your products or services. Partnering with others. Look for ways to collaborate. With $1,000, you could partner with a friend or colleague to pool resources and explore larger business opportunities. Joint ventures can provide a great learning experience and increase your chances of success. Testing ideas. Another approach is to use your $1,000 to test a business idea on a small scale. For instance, if you want to start a catering service, use the funds to host small events and gauge interest. This allows you to validate your idea without significant risk. Entrepreneurship can be a great way to turn a small investment into something bigger, while gaining valuable skills and insights along the way. When I was starting out, I made mistakes too. Here are the most common ones. Investing in questionable projects that promised high returns, chasing quick money without understanding the risks, using money that was needed for other important purposes. My advice: avoid the temptation of quick profits. It's better to invest in knowledge and experience than to lose your money in unreliable schemes. Take the time to research and make informed decisions to build a solid foundation for your financial journey. Learn from others' mistakes. Talk to experienced investors or read books about investing to understand common pitfalls. Learning from others' experiences can save you from making costly mistakes yourself. Emphasize patience. One of the biggest mistakes beginners make is expecting immediate results. Investments, whether in yourself, a business, or financial markets, often take time to show returns. Be patient and focus on long-term growth.